Imagine losing faith in the world's reserve currency, the dollar, within a single decade. What if I told you the pattern that destroyed the British pound between 1945 and 1967 is now repeating? But this time, it's happening to the US dollar between 2025 and 2035. The warning signals are flashing, and almost nobody is talking about it. Interest rates, debt levels, global trade imbalances, numbers we thought were stable are now screaming danger. The last time this happened, fortunes vanished, empires shifted, and everyday people were blindsided. Are you ready for the dollar's final decade? Visual cue: simple animated timeline showing 1945 to 1967 British pound collapse, then transitioning to modern US economic stats. Here's the reality in plain terms. The dollar is showing the same cracks that destroyed the British pound post-World War II. Back then, Britain was weighed down by debts, global obligations, and a financial system that couldn't sustain itself today. The US faces eerily similar pressures. Think of it like a financial time bomb. The bigger the debt, the louder the ticking. Yield curves inverted, deficits ballooning, foreign reserves shrinking, all pointing to a potential reckoning. History isn't repeating exactly, it's rhyming. And if you know what to watch, you can see the warning signs long before most investors even blink. Historical context: 1945 to 1967 British collapse after World War II. Britain was at the top of the world stage, but financially, it was fragile. Debt to GDP ratios skyrocketed. Exports were struggling, gold reserves were dwindling, and the pound was losing value against the dollar. By 1967, the British government had no choice but to devalue the pound. Suddenly, everything from global trade to everyday prices was impacted overnight. Sound familiar? Modern parallels: 2025 to 2035 dollar dynamics. Fast forward to today. The US dollar dominates global trade, but the cracks are visible. National debt has surpassed $50 trillion. Federal deficits are growing faster than GDP. Treasury yields are sending mixed signals, with inversion periods longer than anyone expected. The Fed prints money to stabilize markets, but each injection increases the risk of a long-term collapse. Simply put, the appearance of stability is deceiving. Beneath it lies a time bomb ticking toward 2035. Market signals you can't ignore. Economists rarely sound the alarm, but here's what they're missing. Yield curve inversions historically have preceded every major US recession since 1950. Global reliance on the dollar is beginning to erode as emerging economies diversify reserves. Speculative bubbles from tech stocks to cryptocurrencies inflate while underlying risk grows. Every historical collapse started with this kind of illusion. Stability on the surface, chaos underneath. The dollar isn't just a US problem, it's the world's problem. Countries holding trillions in dollar reserves are now vulnerable to fluctuations. If the US faces a sudden debt shock, every export-dependent economy feels it first. Global markets are tightly interwoven, like a web ready to snap. One misstep, and the financial shockwaves could be unprecedented. So what does this mean for you? The dollar's final decade could reshape wealth, trade, and personal finances in ways we haven't seen in a lifetime. Ignoring these signals is no longer an option. The time to pay attention, to educate yourself, and to prepare is now, not after the collapse begins. Ask yourself, will you be watching from the sidelines, or will you understand the signals before the clock runs out? History is giving us a blueprint, but only those who read it will survive the next financial reset. Visual cue, call to action, graphics. Subscribe for alerts, follow for updates, overlay with charts fading out.